China's August 2025 economic slowdown raises doubts about growth target. China's economy stumbled again in August 2025, raising fresh concerns over whether the country can achieve its 5% annual GDP growth target. Industrial output slows. Industrial production rose 5.2% year-on-year, its slowest pace since August 2024 and weaker than July's 5.7%. Extreme weather, scorching heat, and prolonged rain disrupted supply chains and factory operations, weighing on manufacturing activity. Weak consumer spending, retail sales, a key gauge of domestic demand, grew just 3.4%, the lowest since late 2024. Despite government efforts to encourage spending, consumer confidence remains fragile. The deepening property crisis has eroded household wealth, discouraging big purchases like cars, appliances, and real estate. Investment nearly stalls. Fixed asset investment rose only 0.5% in the first 8 months of the year, showing that both private and public sector investment is losing steam. Labor market stress. Unemployment edged up to 5.3%, signaling continued strain in the job market. Youth unemployment remains a major concern, putting pressure on Beijing to step in with job creation measures. Property market crisis. China's property downturn continues to hurt growth. Falling home prices and developer debt have dragged down construction activity and weakened industries tied to real estate, including steel and cement. Can China hit its growth target? Economists warn that if this slowdown continues, Beijing may miss its 5% growth goal. Policymakers may need to cut interest rates to encourage borrowing and investment. Introduce new fiscal stimulus packages for infrastructure projects. Stabilize the housing market with targeted support. Boost consumer confidence through tax cuts and incentives. Global impact. China's economic health affects the entire world. Weaker demand means lower exports for countries supplying raw materials and slower global trade. Multinational companies dependent on Chinese consumers could also feel the squeeze. Conclusion: August's data shows that China's recovery is still fragile. Whether Beijing can revive manufacturing, stabilize the property market, and restore consumer confidence will decide not only China's 2025 growth trajectory but also global economic momentum. The next few months will be critical for policymakers as they balance stimulus measures with long-term stability.